Strong and solid. Those are the words used to describe the German economy after the latest ZEW report showed investor sentiment increased for the fourth consecutive month. But is their trade balance surplus a concern? Joining me down the line to discuss is Dr. Simon Juncker. Simon, the main reason for growth was domestic demand, which some analysts say makes Germany less dependent on the rest of the world. But what do you make of the suggestion that Germany's economic model is hindering the attempt of rebalancing much needed in the rest of Europe?
Well, there may certainly be some grain of truth in it, in this critique, but I wouldn't share it in its entirety, because first, you see that asset-based flows make up like 60 billion in our current account, so that makes like 2 or 2.5 percentage point of the 7% surplus that we are discussing is due to income based on the German net foreign asset position. So that's assets that we accumulated over the years, and you cannot discuss that away. I mean, you should then focus on the trade balance. And there you already see some adjustment taking place. I admit that the adjustment process is really rather slow, and you could do more. That's true. But looking at wages growing strongly over the recent quarters and being projected to continue their strong growth, German private consumption is projected to pick up substantially, so that should lead to somewhat stronger import demand in the future.
Angela Merkel is still locked in negotiations to form a new government almost 2 months after her Christian Democratic bloc won a general election. A group of her economic advisers said last week that possible compromises made to form a coalition with Social Democrats, including a minimum wage and higher pensions, risk rolling back reforms that have helped the economy. But what do you think?
Personally, I would agree to the viewpoint of the Council of Economic Advisors. So first, the coalition talks take far too long, so they could have been already made a deal. That's the first point. So Europe is waiting for them to make a decision. And second, the decisions that appear to be made do not appear to me as very promising steps forward, rather steps backward. If you, for example, look at the stalling discussion in the energy change policy, there's some action required urgently, and they really don't get this problem addressed at all. Then we have, for example, surpluses in the social security system currently. That's something that's very temporary. But instead of lowering the social contribution rates, which was previously penciled in by many forecasters, they don't want to do that, and they just want to take these surpluses to do something else, some lump sum transfers without any incentive to increase labor supply and so on. So that's something that really looks a bit backward. Not to mention the discussions on bracket creep, tax progression. They should reform that. So they really not talking about a big deal in the coalition talks.
This week also sees the release of Eurozone PMIs. Now, we had some disappointment from the latest GDP results, most evidently in France. But some analysts suggest this should be attributed to nothing more than technical factors and that growth will resume. Do you agree that Germany can negotiate these headwinds?
Yeah, that's really the crucial point. I think we will see the German economy picking up some momentum in the next couple of quarters, even with investment picking up slowly as the global economy recovers slowly. But I mean, we are really hoping that the US economy really recovers as strongly as we are currently all anticipate. So that will give some that will push the German economy too. But given that the euro area itself is still having a lot of trouble, not to mention all these private debt problems, any economic recovery in Germany is bound to remain rather moderate.
Simon, according to some, now is the time to buy euro-dollar because of the interest rate differentials. But how do you expect the pair to perform moving forward?
Well, first I have to mention that we're not doing an exchange rate forecast, so that's just my personal view. But given that the U.S. monetary policy is anticipated to become less expansionary much sooner than the ECB, it appears to me that the euro dollar, so the U.S. dollar will strengthen in the course of next year, even with the current account balance of the Eurozone moving towards slight surpluses. But I would say that the euro will become weaker against the dollar.
Simon, thank you so much for your insights today. Well, viewers, that's all from Simon and myself for the moment, but for some more currency forecasts, don't forget to tune in tomorrow for the Midweek Targets and Focus programme with my colleague Elaine Stenson. Goodbye for now.